Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. So right now the net asset of my account is 71,859.21. Today's Apple closed up 1.43% to 187.44. And today the share of my shorting Apple's price closed with a loss of 50.2. SQQQ closed down more than 6% to 16.34, and SPY closed up 1.94% to 448. And United Natural Gas also closed down with closer to 4% to 6.46. The market performed generally well today. Dow Jones Industrial Average closed up 1.43%, Nasdaq Composite closed up 2.37%, and S&P 500 closed up 1.91%. Today, all of the industries closed higher with exceptional performance in the auto manufacturers and the financials industry. Today, let's talk about the reporting the CPI that have boosted the market sentiment of the U.S. economy. U.S. stocks closed higher, and October CPI was weaker than expected, and the 10-year Treasury notes fell 18.3% to 4.49% from an intraday low of 4.432. The yield on the 2-year Treasury note fell 21.3 basis points to 4.828 and fell from an intraday low of 4.809. Analysts noted that today's CPI plunged the U.S. Treasury yields, which is actually a relaxation of financial conditions. During the recent yield surge, there was much belief that the market was doing things for the Fed. The survey conducted by BOA showed that investors firmly believe the interest rate will be cut in 2024 and are bullish on bonds. The monthly survey showed investors are selling cash, holding bonds, and increasing their positions at their highest level since 2009. The monthly CPI released from October rose 3.2% year-on-year, and this is the lowest increase since July. The Labor Department reported that the CPI rose 0% month-on-month in October, and is the slowest pace since July 2022. Excluding volatile food and energy prices, the core CPI rose 4% in October from a year earlier, the lowest level since September 2021. Core CPI rose 0.2% month-on-month, which is also the lowest since July. The economists' expectation for the CPI was a 3.3% year-on-year and a core CPI of 4.1%. However, the weaker-than-average CPI shows that the investors have boosted their sentiment about the market is going to stop raising interest rates, that the inflation is under control by the Fed as one more indicator that proves their point. Given the commodity inflation has fallen and inflation is in services without housing usually adjusts slowly, the key to the coming quarters will be residential price inflation, and there will always be some bumps on the road to decline. Richmond Fed President Thomas Barkin said earlier Tuesday that despite substantial progress in curbing price pressures in recent months, he did not believe the path to be 2% target will become. Barkin said, inflation figures have fallen, but they have only partially reversed the surge in the prices during the pandemic. Housing costs and housing prices are still higher than historical, and so is the inflation in the service sector. Some housing market participants believe that the CPI data would mean that the Fed's test is complete, meaning that the Fed will not raise interest rates in the future. Other people believe that the FOMC must be patient and let the last year's austerity policy fully permeate through the economy. With the market pricing in interest rate cuts at nearly 5% yields, the 2-year note are expected to offer highly attractive risk-adjusted returns. Core inflation rose 4% 4% year-on-year, the smallest gain since September 2021, suggesting that inflation, while some way from the Fed's target, has made at least some gradual progress, analysts said. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.